These are some of the exemptions. Airport lounge memberships is a good one because you don't get a tax deduction for that if you pay for it yourself. You do if you package. The common exemption nowadays are your iPads. Your iPads, your laptops, are different machines. You can have one of each every FBT year. If you break one, you can have a replacement one. Internet usage. Be careful with internet usage. Unless the employer is owner of the actual laptop, then providing internet usage for private purposes sometimes does not get you around the exemption, even though the item itself is exempt. So if you provide a laptop or an iPad, you test at the point that it is given or the point that it is acquired, is it predominantly going to be used for business? At that point in time you make the assessment. Don't worry what happens 6 months down the track, it's what happens at that point in time. If it's going to be used predominantly for business, or it's good to have a declaration from the employee stating that, then it will be an exempt item. We talked about relocation, the car parking, $10 million test, don't forget about that. And the ordinary other items, these are what are called otherwise deductible. Newspapers, financial review, if I could ordinarily get a tax deduction for that, I can package it as well. The only benefit really is I save the GST. So that's why you would want to consider packaging the iPad or the laptop, even though I can get a deduction over time through depreciation. If I package it through my employer, number one, I don't have to depreciate it because I get an immediate deduction. But number two, if my employer is generous enough, they'll pass on the GST credit. And again, the other exemption, the big one, is the $300 minor benefit. And it doesn't just apply to entertainment, it can apply to a range of things. Now, I have seen situations where what the employer was doing, every month they'd have a staff incentive program for the sales guys, and they'd provide a voucher, a $300 or $299 voucher. Remember, the $300 amount is inclusive of GST. A $299 voucher, and that voucher was only provided if they met certain sales targets. Now, the employer stated, well, look, that's a minor benefit. We only do it every so often. But unfortunately it's not. If it's an incentive for actual sales, or there's a connection there with employment income, and it's not for a random event, then it won't be caught within the minor benefit rule. So just be careful with the vouchers to employees. At Christmas time it's all fine, it's just a one-off occasion, but if it's an every month type event, it won't apply. I'll put in superannuation there. I mean, that should be overriding everything, superannuation. That's depending on what age you are and category you are, you may find that that is probably one great item to package. There's no fringe benefits tax on it. You get a tax deduction for it, and ordinarily you pay 15% of tax when it goes in the super fund. Minor benefit, just for your own purpose, I won't reiterate all that. Okay, we talked about the work-related exemptions. Overriding this are employee declarations through all these items, whether it's internet, computers, any reimbursements from staff that you're actually putting through.